Good morning, this is Ken Long from Tortoise Capital Management. I want to review a case study with you from September 4th, 2012. That is a demonstration of Tortoise intraday techniques. You'll see the regression line crossover technique, this sideways quiet channel technique, and the learning point that re-entry is the key to sanity. So let's see how the trades unfolded that day. These are all 3-minute charts. The blue river looking area is the 30-period Bollinger Band plus or minus 1 standard deviation, with the red line being the Bollinger Band mean, or a simple 30-period moving average. I'm using 3-minute bar charts. The orange looking tape, or the ribbon, is a 2-period Bollinger Band plus or minus 1, and the little dotted line is the Bollinger Band mean, the 2-period moving average, essentially. Thick blue line is a 10-period regression line. Black line is a 30-period regression line, and we'll use those features to lay out the trades. Green circles indicate entries. Red circles indicate exits, with red and green lines showing where the price point actually hit. So trade number one, market opened at 9:30, and we're looking at UVXY, the double VIX, the double leverage VIX. So trade one was an entry at 5:38 with an initial stop of 20 cents, and that's triggered by support at the bottom of the river, crossing the Bollinger Band mean after a period of sideways. Here I'm playing for the long side in volatility. So entry at 5:38, 20-cent stop. It gets to the top of the river, fails, and that's enough for me to exit at the bottom of the river at 5:34. So loss of 4 cents, about minus 0.3 R. Trade number three is going to be a re-entry at $5.40. When price and the regression line are starting to leave the river. Trade number two, we'll switch over to TNA, the 3 times small cap leveraged ETF. So as the volatility trade failed, at the same time the equity trade started to work. So price was leaving the river, and so get long at 56.40 with a 40 cent initial stop. That leaves the river briefly, but then fails, and then I exit here when price crosses back below the Bollinger Band mean, and that's at minus 0.4 R, so we're net at minus 0.7 R for those two trades. That's when the third trade kicks in. There's an option here to go short TNA, or it's easier to play TZA, which is the triple leveraged inverse small cap. That would be leaving the river, just as this one is failing out of the river. I elected to stay with UVXY as it leaves the river. This ends up being about a 2R trade that pays for the first couple losses, so it's not unusual to get the first couple wrong, or not be aligned with the market as it jockeys around early. You want to make sure that you're into the position as it takes off. This one gets to 550 pretty quickly. Lets us get to no lose, and that ends up being a couple R. After that trade, the rest of the day really did not feature, in the morning trade, did not really feature big runaway moves. In fact, that move that came out of the river only got up to about 555 before we end up exiting to cover our earlier losses. And then the market gets into this sideways quiet channel of price, and now you can see the river in SPY coming down to join it. And now at this point, which I called in the chat room the moment of decision, what we had was about an hour's worth of price data in SPY that was just sideways in a very tight channel. So now price comes back into the river. The river's coming down to price. The 30-period regression line is rolling up and entering the river. Price and the 10 period have entered and are now sitting on the Bollinger Band mean. That's really what I would call the beginning of sideways quiet channel as soon as that 30 period gets in. So when you have price, the Bollinger Band, both regression lines inside the river, and the river starts going sideways, that's sideways quiet channel. In IWM, which is the Russell 2000, this is TNA, the 3 times leveraged, it did a regression line crossover here, and we end up getting an entry here at about $5, 55.40-ish when it failed to fail further. It doesn't run away, it just keeps chopping sideways, and so now what we have at this moment here at about 11:21 Eastern is we have what I call the moment of decision. That is, SPY's price has come back to the middle of the river. Both regression lines have entered. In this case, we have in the small caps, the regression line is about ready to enter the river. And then in UVXY, or the volatility play, it has failed all the way back into the river, crossed the line, and is now finding support here, or finding price right at the southern edge of the river. So what we have here is a perfect moment of tension. You have the indexes are right at their Bollinger Band means, and having failed to fail further, could now make a breakout to the upside. If we were to see that, we would be normally expecting volatility to dry up, and then what we'd see is UVXY fall out of the river as people are rushing to get off their hedges and then into the equities on the long side. So this is a moment where the market is well poised to take off. So let's see what happens. This, as I mentioned in TNA, this was the entry after the regression line crossover. Get my first entry here at about 55.40 with a 30-cent initial stop. It's slightly off the chart here at 55.11 would be the stop, but I've drawn the red line so you can see where the stop would be. And so in this subsequent move, that stop is never hit. So this is regression line crossover, price and Bollinger Band re-entering the river. That's where I go long on the first position with a 30-cent initial stop. This vertical blue line means that I'm stalking it here because of the impending regression line crossover. This initial position ends up exiting up here at 56.14 later on, but I want to show the rest of the story here. So we get our first entry here with a 30-cent stop. Instead of being a runaway move, it continues to chop around. I want you to notice the Bollinger Band pinch, and the Bollinger Band mean gets flat. In this yellow shaded area, classify as a sideways quiet channel, you have price and both regression lines inside the river and the river contracting, so that's why we call it sideways, and quiet because of the pinch and volatility, and then a channel because it's in a very narrowly constructed sideways area. The second entry then comes in at about 55.65 when price and the 10 period leave the river, followed by the 30 period regression line. You get this range expansion in the Bollinger Bands. Bollinger Band starts tilting up. The Bollinger Band mean is tilting up, and so now we've got two positions into this one. It holds for support here, pause to refresh if you will, at 55.80. Notice that the 30 period is still acting as a nice guide. That hesitation never crosses the 30 period regression line or the river, continues on, gets all the way up to 56.19 at the high, and then since these are 3-minute charts in a period of about a minute and a half and then 2 more full 3-minute bars of sort of about 7 or 8 minutes, it fails to make a new high. And now with two positions in this one with 30-cent initial stops, that's holding a couple R right there, and take my exit at 56.14 for a couple R. Now this is a little bit later in the day. I want, just for perspective, I want you to see the first set of trades in TNA. So the entry when price re-entered the river, that sideways quiet channel period, then the second position that comes on when price is leaving the river, and the first exit here at 56.14. it comes back to the regression line, never re-enters the river, and now takes out the previous high at 56.19. So I re-enter here about 15 minutes later, around 56.30. Price continues to take off. It gets a hesitation here again, never re-enters the river, and then starts breaking out to the upside again. And this looks like it could be a directional day, so I put the second position on here as it breaks out of this congestion pattern. And then it zooms quickly to 57.49, and that's holding a pretty good trade right there. Blue circle means I'm stalking it. And now the same thing is happening up here. We get this runaway move to the upside with 2 bullets into it, starts to fail. And now I'm stalking the exit on that one. It never looked back. End up getting a third entry at 58. So now we've got these 3 positions in, and it's a runaway freight train, gets up to 58.50, and then starts pulling back again. And for about 6 minutes or so, it starts chopping around. And with 3 bullets in this, I'm getting nervous, and so we go ahead and exit everything at 58.50. And it turns out to be a better trade than I even realized, probably. The net of those is about 14R. So with the 2R from round 1, and then the rapid re-entry triggering a continued interest, we end up locking into this runaway freight train for about 16 total R. The rest of the story is selling into the diminishing enthusiasm here at 58.50. Was really a pretty good exit. On those runaway moves like that, when we have the formal regression line crossover outside of the river, that's when the blue rolls over and crosses the black. That's really the time that I set myself. I want to be out not later than that after a really nice move, because I feel like I've gotten the sweet spot of that curve, and the rest of it is just going to start getting harder. If we had not been in that trade, but if we were looking to trade the other way, the regression line crossover outside of the river we program as a target of a resumption to the Bollinger Band mean. In this case, we would be looking to be short somewhere around 58.30-ish as we start seeing the failure here. And then we'd be looking for a target about 57.40, which is a 90-cent move. So if I can manage a 30-cent stop on the short side, I can actually set that up as a 3-to-1 reward to risk, because 30 cents above 58.31, we'd be above the high of the day, and we'd be playing for a retracement to the mean. I didn't take that trade, but that trade would frame out pretty well on a reward to risk basis. So the point on this one is to just have a working understanding or visualization of the regression line crossover. The regression line crossover is what got us into this trade early. Regression line crossover outside of the river. Price entered the river. Had my 30-cent stop in here, and then instead of being a runaway, it goes into sideways quiet channel. I actually think of that as a favorable condition because it is failure to fail further, and I've already got one position into this early. Then the breakout from sideways quiet channel I like, because now we're talking about reversion to the mean. It gets back up here and closes the gap, and then starts stalling with 2 positions on it, and I feel pretty good on that. That's 2R. That pays for the minus 0.7R earlier in the day. So that's both a regression line crossover and a sideways quiet channel. 2 different strategies that come out of the same lens of using regression lines, Bollinger Bands, and price channels to frame trades for reward to risk. I should also mention this purple line here is the volume weighted average price. I forgot to mention that earlier. A lot of times that acts as a magnet after an extreme move. I'm never surprised when price gets back to that VWAP, and then the breakout from here, breaking north of the VWAP, was a very positive thing. So I want you to notice how the Bollinger Band mean rolls over. It's flat when we're in sideways quiet channel and starts to revert. I want you to notice the 30-period regression line crossing the Bollinger Band mean as a precursor to a potential reverse in the flow of the river. I want you to notice stalking the exits after a nice run. rather than looking to add here, I'm looking to ensure that I can pay for the information from earlier in the trades or in the trading day. And then the idea being that this exit is my first screen for a potential re-entry. If we get a regression line crossover here, in 3, 6, or 9 minutes, when the blue, if this were to fail here, the blue line would roll over pretty quickly and cross the black line. So I would expect a regression line crossover around 56.05, and then I'd be looking for a target of back to the Bollinger Band mean, which is about 40 cents. That doesn't quite test out on 2 to 1, so I couldn't really take that. But that's the mentality that goes in, that these runs last as long as they run, and then until they stop. And so the regression line crossovers are the formal alerts, and then I look for just enough price action to get me interested. I love the sideways quiet channel. I love the regression line crossover, and then I'm very happy with stalking the exits and selling too early, because I know then I can make some money and then get to be wrong when price continues. And as long as I can re-enter the trade, then I feel pretty good about it. And that's what this really opened up for me, was the willingness to be wrong, and then a willingness to get right back onto the trade again with a 30-cent stop, and then play the moves. If I had exited in here when price was approaching back to the river, it's just another re-entry where the second green circle is, and that would be a normal place for me to re-enter for the same reason that I re-entered here, and that was an upward directional day, price still outside of the river, takes out the high of this local congestion area, and then you still got this nice move from 56.75, even if you had gotten out of the first leg. Stalking the exit here, it never even failed any further, and then quickly ran up to 58.50. So another 3R north of here was still available. So that's Ken Long from Tortoise Capital with the review of a case study from September 4th, 2012, looking at regression line crossover, sideways quiet channel, and the idea that re-entry is the key to sanity. I would probably add reward to risk ratios and framing the trades, and not sticking around too long when the trade isn't working in your favor, and being ready to re-enter if the trade pauses and then refreshes and then starts taking off again. So you got to be bi-directional in this, and be quick, and trade at a low enough level of risk that each one of these simply is another transaction, just another day at work. Thanks for your attention.